ask hello to everybody, how we all doing. Hope everybody's having a great weekend. This is 50 pips, rocking and rolling, 15th of October, 2017. No trade calls or recommendations. Everybody's responsible for their own stuff. We're here for educational purpose only. So what's going on? More possible wheeling and dealing out of Washington. Still this week, we've got a 18th, a date for possible North Korea to do something. We've got basically a U.S. Shaping up for some more drills in the Korean Peninsula. We've got Catalan deadline looming. We've got May flying to Brussels for impromptu meeting on Brexit. And what else? Basically, bit of a mess across the board, but don't worry because stocks keep on going higher, so there's nothing to worry about. So what's happening going into this week? Again, there's an awful lot of geopolitical risk, headline risk. Of course, we forgot all the wheeling and dealing on crude with the Saudi Aramco, etc. But nothing too big on the wires this week. We do have some central bank speakers. We've got Draghi speaking. We've got some FOMC speakers. But really, as we go into a fairly quiet week in terms of what is on the calendar with Yellen speaking on the weekend, attention is going to be focusing more and more towards the back end of next week, right? Not only because we've got, that BOC next rate statement, but really it's all about Thursday, 26th. With the next ECB press conference, right, and the rate decision. So I think a lot of people are almost given up on any kind of volatility, given up on any kind of move on the VIX and saying, okay, well, if we're going to get anything, since even a nuclear threat of nuclear war, missiles tests isn't really going to move this, it'll have to be back to Super Mario, right, to move the needle. So I think we're going into this week with most participants thinking, well, more of the same, nothing much going on the VIX, and if anything's going to happen, it'll happen like 25th, 26th going into Draghi. We still think that it's better to be a little bit more prudent. So again, nothing against that base case. I think that's the scenario we're working with, but as you can see here, VIX really not worrying about anything. We'll have to wait and see. Our call hasn't changed here. We expect to see, before we see a close below 9, we expect to see a move in the high teens, right? So nothing much. On the equities, one thing which is a little bit interesting we'd like to point out, we've been talking about, is basically the weakness on the Russell, on the rut. And what's interesting here is if you look, as we hover at these highs, right, going here in terms of action for the past days, what have we got? Essentially, we've got, after we had this rip higher, right, where the Russell spending most of the year pretty much unchanged, then we had like a 10% rip in the past month. We hovered here, and then we spent 1, 2, 3, 4, 5, 6, 7, 8, 9 days. And the last 9 days, you've got 3, 4, 5, 6 days where we closed negative. So to us, it looks like it's struggling a little bit with Momo. It's looking heavier and heavier. And our base case is that, it would be healthy to see some kind of a correction, even if we're going to ultimately press higher. And what we're looking for is for this to break down and come back into this trend line, or, what we're looking at is basically 1450s, right? That range. Look for these moving averages to come here, and we would consider this move back down into this area, even if it's for the next rotation higher, is the healthy move. Anything below here, then it could get ugly, it could get heavy. But we're looking for this to break to the downside and to have a healthy correction down, from which potentially continue to rotate. But whether you're a bull or a bear, we believe that this is the healthy move right here, right now. In terms of the dollar index, what's going on in the dollar index? Well, basically, let's see if this plays ball. Got my trading views being a little bit slow recently. So what's going on with the dollar index? So basically, we had this base, and we talked about the fact that we're looking for a move back to the 94.40s, and that was going to be the next pivotal zone, right? So far the market's done what it had to, and the fight is on between the bears pressing, holding the trend, right? Holding everything on trend, the 200, the 100, the 50, negative close here, trying to smack this back down to continue. And the bulls trying, after they held this move back above the 200 on the weekly, looking for this bigger rotation higher. You see how all the levels are pretty much stepping up. That's where the 200's coming in on the daily, and on the weekly are the two moving averages. So we're still stuck here, right? You've got the 200, the 50, the 100, and a lot of people like to play ping pong between these zones, right? So breakdown of these two moving averages, looking for it to clip the 200 on the weekly, and the hold above, playing it to the upside, looking for it to come back and clip the 50 and the 100, right? A lot of people, fairly technical moves. So here, going back to the daily, what's happening, if only this is going to load, the fight is on, basically, is the shorts that need to cap the 94.40s, and here the longs that are trying to cap this, pretty much the 50 back of this move from A to B. So going into the week, I think the easiest way to look at it is look at the 100 DMA and look at the 50 DMA, right? Daily closes above the 100, bullish for a bigger squeeze back higher. Daily closes below the 50, bearish for potential to try and test these lows again. As long as we stay inside the 100 and the 50 DMA, much to do about nothing, sideways chop. You need to see daily closes above or below those zones. That's what we would be looking at. In terms of gold, the rotation is fairly nice. Hard to get a nicer pattern than this, really. Well, I suppose you could get a picture perfect pattern, but this is pretty good. We're looking for this to come back after it broke 1300, for this to come back into this whole zone and to try and base here. And as long as we didn't get a daily close below the 1250, we're looking for this whole rotation to stay in place and for us ultimately to test back higher, right? So we got back down here, positive close around the 100. It's holding all the moving averages. It's back above the 50. All the moving averages are back in trend. So here, 1300 marks a spot, right? Day closes above bullish, day closes below bearish. Here, what you want to see is you want the bulls to continue to press higher. You want any move back down to get bought to continue this rotation higher. And especially if we get a little bit of a hand with some geopolitical risk, we would not be surprised to see 1350s come quick. But this whole move is fully in play. It could still stay very, very choppy in this zone, but we're not changing, right? We're going into every week in long risk off positions, right? So this has been working quite well. Crude, again, there's very little to say. There's just so much chop, right? We've talked about all this wheeling and dealing around the 50, and we can make a fairly good call for the fact that this is a base and we're going back into the 55s, and we could still argue that this is all choppy action and we have to resolve to the downside. I think it's just going to let the headlines decide this. Keep on looking at it as very, very choppy action, and we're very interested in doing something up here or doing something down here. So unless we get a headline we can ride, in the middle, not a lot of interest, especially from a bigger term perspective. If we look at the some of the Forex pairs, so Euro, no change. So basically, we've just been looking at the range here, which has been playing quite nicely. We talked about the fact that here the asymmetric risk reward was to the short side. You had to get short for a move back into these lows. And when we got this trade here, we said the asymmetric risk reward profile was to get long for a move at least back into this topping pattern, right? So that move was done for us, right? Fairly tight risk, 0.8 risk for about 1.6, 1.5 reward. So it's not that bad. Now here it's still stuck. And remember, our base case was that we were going to stay inside this range all the way until we get Draghi next week. So far so good. I mean, in terms of the bigger picture, what's the fight? Well, basically the fight is, if you go back on the weekly, right, and we've been discussing this for a long time, is let Super Mario decide, right? And is it time to retrace? And at that point, we'd be looking, if we break down below the 118.12, we're looking for a move all the way back into the 113. Or is this a sideways consolidation for the inevitable break and move back into the 26s? So that's the big question. And right here, what you have to understand is it's much to do about nothing as long as we stay inside this range. It doesn't mean there aren't trades there, but in terms of the bigger picture, we're just in wait and see, right? This is a huge level, right? Look at previous resistance acting as support, right? This is a huge breakdown zone, right? So it's just wait and see. You've also got not only this, but you've also got the 200 weekly coming in as support. So there's a lot of support. I mean, you'd be hard pressed to argue that the daily is not bearish, right? Of course, this is clearly bearish pattern. A lot of people talking about an inverse shampoo bottle here, right? You know, we'll have to see, but our base case doesn't change. We like to look at the technicals and we recognize what's happening in terms of technicals, but context is extremely important, and that's why we were calling for this to stay in range unless we had some big geopolitical shock until Draghi. In terms of yen, it's all been about the 112, no big change. So our preference had been to try and play the downside. But again, if you're looking at it purely technical, there's just an awful lot of chop here around the 112. And you could argue both ways. Our base case was daily closes above bullish, daily closes bearish. We thought the action here for shorter time frames was extremely bearish, with a market unable to drag new buyers in at new highs. So we expected that test back below back into the 112. So as long as we hold below the 112, we'd expect this to come all the way back down into 109, 108. Again, geopolitical risk could help. Back above, we could try and take a stab back into those highs. Not surprised if this stays choppy all the way until Draghi. But again, a lot of people talk about different ways to play risk off. We'd much rather hold short exposure here than on any of the other currency pairs. If you're worried about North Korea or something like that, so we still think that the best play is on USD JPY, not on any of the other currency pairs. And in terms of Brexit, again, a lot of wheeling and dealing. It's very, very hard to trade this headline risk, very hard to trade this chop. Basically, we'll have to see what happens with the surprise meeting or urgency meeting tomorrow with May. It's probably towards the end of the day. I think it's dinner, so we don't know. What we talked about was basically that technically the chart was in a bullish rotation, and if you look at this, it's very similar to gold. You could actually overlay these. You can use the compare function on and overlay them. It's quite interesting. But basically, this is a bullish rotation, right? There's very little to argue about that. What we said is we favored, we thought that all the headlines out of Brexit were going to be bearish. So we favored trying to look for aggressive short plays, especially after we had this failure on the daily, right? And this was the move. Now, back here, it got a little bit funky. We got previous resistance acting as support, breakthrough. Then you got a big sell-off on the day. On the headline, it ripped back higher. It's just very tricky. But if you look at it technically, again, no big change. 132.50s, bull-bear line below. This would look very, very bearish. As long as it holds above, it looks like it's trying to continue the upside rotation the same way as gold is. We really think that, it's the same thing. If you like these charts, there's far more technical charts, far easier chart to trade this kind of pattern on gold than having to trade through all the Brexit headline risk, right? There's just really not that. We're really not that interested. Again, don't forget to keep an eye on financials. XLF, interesting chart. Don't forget to keep an eye on all those tech stocks. Hopefully it's an interesting week, but if you had to be a betting man or a betting woman, you'd suspect that more volatility, unless you get something on the geopolitical front, will come in next week, not this week here with Draghi. But, let's see, guys. Thank you so much for following. Thank you so much for sharing. Very much appreciated. See you guys on Twitter. Hope everybody has a great week. Take care. Bye-bye, guys.